If you can produce 1 million ounces of silver, 1 million, so all you need is 15 million ounces of silver in the ground, and you can do 1 million for 10 years plus. If you produce 1 million ounces of silver and silver prices are at 100, which is my target or higher, and your all-in cost is $50, which is conservative, you're probably going to be under 50 as a break even, you're going to have $50 per ounce in free cash flow. Times 1 million is $50 million in free cash flow. If you get a 10 multiple, you get a $500 million market cap.
And your next stop will probably be 60, 62 in very short order. I think over the next 6 months, I don't hardly ever go out on a limb like this, but I think $100 an ounce, I think within the next 6 months, it's an easy call.
In this insightful discussion, precious metals experts Don Durrett and Bill Holter break down why silver could be entering one of the most profitable phases in recent memory. Durrett highlights that producing just 1 million ounces of silver per year could generate enormous cash flow for mining companies, especially with silver prices potentially reaching $100 per ounce. At a conservative production cost of $50 per ounce, that would translate into $50 million in annual free cash flow, making certain silver miners extremely undervalued in today's market. Holter adds that the market is currently underestimating silver's explosive potential. With limited supply and rising demand, even moderate production could lead to dramatic price appreciation. Durrett emphasizes that if silver reaches his target of $100 per ounce within the next 6 months, mining companies could see market caps surge toward $500 million or more based on conservative multiples. He also notes that prices may hit intermediate targets of $60, $62 on the way up, underscoring the rapid pace of potential gains. For investors looking to capitalize on silver's tight supply, strong fundamentals, and high leverage in mining operations, this segment provides a roadmap for positioning before a likely surge. If you found this helpful, like, share, and subscribe to The Metal Bar. Turn on the bell so you don't miss any updates, and comment below to share your thoughts on it. Appreciate you for tuning in. Now, listen to the interview.
To start off, gold and silver mining stock is not investing. This is speculating. And you're really speculating on one thing, which is the price of gold and silver, because that is the driver of the value of these stocks. It's a very unique situation. Gold and silver mining companies do not have competitors. They do not have customers. It's a bizarre business. Newmont and Barrick do not compete against each other. They go out and maybe they'll bid on a property, if they might compete there. But by and large, they don't really compete against each other. They compete against themselves. They basically, when they get the gold out of the ground, there's a willing buyer. They don't have to compete. There's no customers. They're just buyers. And you can sell your gold. You can sell your silver. It's an unusual business. And macro, it's so important because you're not investing in a normal business. You're not investing in a normal business. What you're really doing, you're speculating on the price of silver and gold, and then which company is more well-positioned to achieve that. So 80% of my time and since 2004 is spent analyzing the backdrop of gold and silver, because that's the only way you make money. And you have to be a believer, a strong believer that gold and silver prices are going higher. I don't invest for the next 12 months. I could care less about the next 12 months. That's not how you invest in gold and silver mining stocks. You're speculating over the long term, 12, 24, 36 months, because you're chasing alpha. You're not trying to get a 25, 50% return, believe it or not, which you could get in the next 12 months. You're speculating on big alpha. You're speculating on baggers. I don't look at anything under a four bagger. I go four bagger and above. And the only four baggers that I look at are stocks that I think have growth. So in my book, I wrote that this is back in 2010 when I wrote my book. I said in the opening chapter, I'm after five baggers. That's what I'm here to do. I want my portfolio to have at least a 500% return. It's total speculation. And who invests like this? Now, if you believe the gold and silver prices are going higher, a lot higher, then you can basically speculate on that outcome, and then you can analyze the stocks. And it takes a while to understand because it's such a unique business on how to analyze these stocks.
And you can see that for sure within the coin market. Pretty much most silver products are bid at spot or slightly, Eagles are bid over spot. But junk silver, which was really the only form that Americans could buy back in the late 70s and early 80s, junk silver, the bid on that now is like $4 under spot. You can buy junk. It's the cheapest form to buy. It's the best form to own. But what's happened is a lot of the people who bought back at $40, $50 back in 1979, 1980, those have come to market. Those people, a lot of those have sold. And what the dealers are doing or what the wholesalers are doing is they're taking that silver in $3, $4 under spot, and they're sending it to refiners. And they're picking up an extra 6 to 8% commission or VIG or whatever you want to call it, because that junk is being melted down. Now, this is a temporary situation because there's only so much junk that can be sold. And I think that's slowing down already. But what this means is going forward, there's way less junk available than there was just 6 months or a year ago because so much of it has been melted down. In the future, in my opinion, junk silver will be the most expensive form of silver in the United States.
In this in-depth segment, Precious Metals Expert breaks down the unique dynamics of gold and silver mining stocks, emphasizing that investing in these companies is not traditional investing, it's pure speculation. He explains that the value of mining stocks is almost entirely driven by the underlying price of gold and silver, not competition or customer demand. Companies like Newmont and Barrick do not compete in the conventional sense. They primarily compete against themselves for properties, but buyers for their metals are always waiting. The expert stresses that to profit in this market, investors must be strong believers in long-term gold and silver appreciation. He focuses on multi-year speculation, often targeting returns of 4 to 5 times the original investment, rather than short-term gains. This approach requires analyzing both the macroeconomic backdrop and individual company positioning to identify true potential baggers. He also highlights the evolving silver market, pointing out that junk silver, the historically most accessible form for U.S. buyers, is becoming increasingly scarce. Many coins from the late 1970s and early 1980s have been melted down, reducing available supply. As this trend continues, junk silver is poised to become one of the most valuable forms of silver in the country. For those aiming to profit from the next bull market in precious metals, understanding these dynamics is essential. Let's get into the interview.
Well, right now, the United States dollar, call them the treasury bonds, the treasuries represent, 50 to 60% of foreign central bank holdings. So if the dollar cracks, what does that do to the central bank balance sheets? Now, if they have gold on it and the gold has gone up and the dollar's gone down, those countries will be better off than countries. I lived in Costa Rica for 5 years, and that the Costa Rican central bank is exclusively U.S. treasuries. So what's going to happen in a country where all of a sudden their central bank goes belly up? It's going to be a disaster. So it depends on the country, and it depends on the balance sheet of that specific country.
For instance, juniors, explorers, mid-tier developers, and producers, each category is completely different. They have, in many respects, they have nothing in common. They're like 3 different separate businesses, and you have to understand each one. It takes time. I think it takes about 2 years to kind of understand it. It's a lot of fun if you believe in gold and silver prices going higher, then you basically it's like gambling. It's not really investing. It's like gambling, but you have an edge. And I teach people in my book how to have an edge. Believe it or not, there's a way to have an edge, which is fascinating to me that you can actually do that. And it's like Wall Street's completely asleep. Like, for instance, Newmont, when Newmont was at $30, you had an unbelievable edge that you were going to make a lot of money. My target for Newmont's about $350, and they're currently at 90, but they were at 30. So Newmont was a 10 bagger in February of 24, a 10 bagger, and Wall Street was asleep at the wheel, and they didn't see this edge that existed, which kind of blew my mind.
In this insightful segment, Precious Metals Strategist breaks down the critical implications of a potential US dollar decline and its impact on global markets. He explains that US Treasuries currently represent 50 to 60% of foreign central bank holdings. If the dollar weakens, central banks heavily invested in treasuries could face significant losses, while those holding gold would benefit, highlighting the strategic advantage of precious metals in uncertain times. The expert uses Costa Rica as an example, noting that a country with a dollar-heavy central bank could face disaster if the dollar cracks. He also delves into the gold and silver mining sector, emphasizing the diversity of juniors, explorers, mid-tier developers, and producers. Each category operates as a distinct business, requiring investors to understand the nuances to identify the biggest opportunities. The expert compares investing in these stocks to gambling, but with a clear edge when armed with proper knowledge. He cites Newmont as a prime example. Purchased at $30, it recently became a 10-bagger, reaching a $350 target, while Wall Street largely overlooked the opportunity. For investors who believe in rising gold and silver prices, understanding these market dynamics and exploiting hidden edges can lead to substantial gains. If you found this helpful, like, share, and subscribe to The Metal Bar. Turn on the bell so you don't miss any updates, and comment below to share your thoughts on it. Appreciate you for tuning in.